Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having rebounded from the 63.50.70 level, the market staged a strong recovery. However, wrapping up Friday, tumbled all the way back and closed virtually unchanged. After a highly anticipated speech at the Jackson Hole Economic Symposium on Friday, markets breathed a sigh of relief in some ways, as US Federal Reserve said. Again, the Fed will decide on interest rates based on incoming data. However, he did leave the door open for further rate hikes, after saying it is the Fed's job to bring inflation down to our 2% goal, and we will do so. The Fed is prepared to raise interest rates further if appropriate. The war on inflation has a long way to go, even with more favourable recent readings. Looking ahead to this week's blockbuster economic data, though, we get the release of the Australian retail sales. Then we got a speech from the RBA, and followed by Wednesday's CPI year on year. From China, we get the update of the manufacturing PMI. However, the US job numbers will be the highlight of the week, as it will reflect on the US dollar. With the dollar index, which measures the greenback strength against a basket of six major currencies, continues its trek higher after reaching its objective of 104, posted an intraday high of 104.36 and settled at 104.12. With the technicals somewhat buckled from the failed upside attempt, all eyes look towards 63.55.70, a key point as a break beneath there would give further exposure down towards the region of 62.80 and reassess. The euro-dollar took further casualties after a choppy week as its rival, the US dollar index, continues to climb. Along with that, with the Fed now leaving the door open for possible further rate hikes and not closing out for the rest of this year, therefore could see much volatility this week as eyes look towards the main event being the US non-farm payrolls report. A hotter than expected jobs reading for August would likely revive inflation concerns. However, a much weaker employment number could fuel worries that the Fed's interest rate hikes are starting to weigh on the economy. Further into the month, though, for September, we've got the Consumer Price Index, or the CPI, on the September the 13th. And along with that, we've got the Fed Open Market Committee on the 20th of September. Reading into Jackson Hole's speech from the Federal Reserve, Jerome Powell, some expectations of a rate increase this year are favourable. However, a rate hike in September was seen as less likely. With the downside objective reached at 107.75, the technicals are still a little bit heavy, but keeping an eye on the RSI, there's a bit of divergence, so we could see a possible rebound. However, a close beneath there in New York would see further weakness towards 106.55 and reassess. The dollar yen still pushing to the upside after a slight pause in its upward trek. It's back towards that topside level, which is a key point at 146.60.70. A clearance there will give further guide up towards 148 and reassess. Any pullback is likely to be shallow, with the support seen roughly around 145.20.25. Pound closed out to a sour note after crushing support level at 126.20, has now got further downside exposure to 125 figure 25. From there, the market could display a rebound and see a possible bounce towards the region of 126. However, the technicals are oversold, and therefore the bounce is warranted if we get closer to 125. The gold outlook, well, since clearing the level of 1,910.11, the bullishness has been a little bit mixed over the last 2 days. With two posted dojis, the market could see some weakness come back into play and therefore look back towards the bottom side of the range, anywhere from 1,907 and down towards 1,898 and maybe down to its objective, which I'm still viewing at 1,850. Any further upside attempts should be limited, with the resistance capped around 1,924 to 26. Wrapping up with oil, the market was a little bit choppy and closed out its third week in negative territory, even though the balls did come back to play, wasn't enough to get it across the winning line. However, we did respect the area around 77.45.60, and from the bounce still keeps it on track, that is, towards a target of $82.40.60 and reassess. The technicals are bullish, and therefore with the bullish divergence kicking in firmly, I'm now waiting to see if this MACD comes back into play and supports the further upside attempts. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.